What is going on, my friends? Ryan Williams here, back with a brand new dividend stock portfolio. That's right, guys. A few days ago, I created a brand new portfolio that I'll be contributing to every single week. And if you guys are familiar with my content, then you probably already know what I'm talking about. But in case you're new to my channel, first of all, welcome aboard. And second of all, you're in for a real treat because today's video is going to be a whole lot of fun. In this video, we are going to be going under the hood into my new dividend stock portfolio, where I'll be showing you all of my holdings and how I plan to grow this new portfolio. And then later on in the video, we will get into a weekly portfolio update where I'll show you what's going on in the main portfolio that you guys all know and love. And for that portfolio, we'll be talking about the share price performance, how my annual dividend income has increased in the past week, as well as any stocks that I purchased in the last week. So be sure to stick around until the end so you don't miss a thing. Anyway, before we get rocking and rolling, if the best part of your day is waking up to see new dividend payments coming in, then go ahead and give this video a big thumbs up. Also, leave me a comment below and let me know how your portfolios performed this week. It was just a very crazy week on the stock market, and I would imagine a lot of you guys saw some pretty solid growth this week, so I'd love to hear about it. Anyway, thank you so much for doing that, and now, without further ado, let's get into it. All right, guys, now before we jump over to the screen and I show you guys my new portfolio, I probably should address the new little setup here. It's not really too different from what you'd normally see in my videos. We're just a little bit tighter, okay? We're getting a little bit more comfy on the screen there. And then I also have this brand new microphone right here, which was a Christmas gift. Not that the microphone that I had before where I would just clip it to my collar here was any bad. Actually, I think it sounded pretty good, but I'm hoping that this new microphone right here will just increase the quality of the audio even just a little bit. Even if it's just a little bit better, that is good enough for me. So anyway, guys, that's kind of the story that's going on here. Nothing too crazy, but with that said, I'd be very curious to hear your thoughts and what you think of both the new setup, this new framing that we have here, and also this new microphone. Let me know how it sounds to you guys in the comments below. I'm sure for at least the next couple of videos, I'll have to be making some tweaks and really get the settings right for this bad boy, because this is obviously my first time using this guy. So let me know what you think in the comments below. And now with that said, let's jump over to the screen and reveal the new portfolio. All right, guys, so here it is. As promised, this is the new dividend stock portfolio. And as you guys can see, I switched things up a little bit and made this new portfolio here on M1 Finance, which I'm very excited about. This is a platform that I've been wanting to try for a while, but I just didn't feel good about moving my main portfolio over to M1. I'd rather keep that in Charles Schwab, but I figured for this new portfolio, why not give M1 Finance a shot since we're starting fresh? New portfolio, new brokerage, but hopefully still some good things ahead. One of the first things you guys will notice is I gave this portfolio a name, and I'm calling it Easy Money Squared. Now, first of all, why Easy Money? And second of all, why Squared? So to address the first point here, why Easy Money? What is the story there? As you guys will see as we make our way throughout this video, this portfolio is going to be very hands-off. Okay, I'm not even going to have to lift a finger to grow this account. Essentially, probably really won't have to do too much. And so, with that said, at the end of the day, it's just going to be easy money. Making money with this portfolio is going to be a piece of cake. That's why I'm calling it Easy Money. And I think that will make more sense as we progress through this video and I show you guys the holdings in this portfolio and all that jazz. But basically, guys, I'll have it set up to auto transfer some money from my checking account every single week, and then it will auto invest those funds into the holdings that I have set. And M1's a great platform if you really want to be a hands-off investor, because they have these pies right here, which how that works, guys, is essentially once you have your money in M1 Finance in this brokerage, it will then go and distribute that money based on the percentages that you have allocated for each of the holdings in here. And I probably shouldn't have highlighted those because you saw some of the holdings, but that's essentially how it works in M1 Finance. So it's going to be very hands-off and it's going to be easy money. Now, to address the second point, why Squared? Well, this is the second portfolio I have, which, spoiler alert, guys, I changed the name of the main portfolio to Easy Money. That's now the Easy Money Dividend portfolio. And I'll tell you guys what, making money in that portfolio, as you guys know, it's also a piece of cake, okay? Getting those dividends, you don't have to lift a finger. So that's kind of why I decided to go in this direction with the name. It kind of made sense to me and it seemed to click, so I went with it. But anyway, guys, one of the key differences in this portfolio compared to my main portfolio that you guys are familiar with, aside from it being on a different brokerage, is that this is actually my first retirement account. This is a Roth IRA instead of being a taxable brokerage account. And if you guys are all familiar with my content, then you probably know that I had this move planned for some time now. I've been wanting to make a Roth IRA at least for, I'd say, the last handful of months, but I told myself I would do it once the turn of the year came and once we got into 2022, which obviously we are now in. So a few days ago, I went and created this portfolio here on M1, and I've already contributed $500 to this portfolio to get it rocking and rolling. But so far, I'm not doing too hot. I'm down about $10 or $8.50 so far. So no big deal though. We're only a few days into it, and like I said, in the long run, guys, we're gonna be okay. It's gonna be easy money. You're probably gonna get sick of hearing me say easy money. I already see that coming. But anyway, guys, for those of you who are not familiar with what Roth IRAs are or this particular type of retirement account, I'll explain some of the differences between this and your standard brokerage account real quick. So as you guys can see on the screen, this is a little definition from Investopedia.com talking about Roth IRAs, and I'm just going to read it verbatim. It says, a Roth IRA is an individual retirement account that allows qualified withdrawals on a tax-free basis if certain conditions are satisfied. It was established in 1997 and named after William Roth, a former U.S. Senator from Delaware. And then moving on to this next screenshot, guys, just another difference between this type of account and a standard brokerage account. The maximum annual contribution that one can make to a Roth IRA is basically $6,000, and that's what we're seeing right here. So because with this type of account, you can withdraw money tax-free, basically, they do limit how much you can actually contribute, which is okay. I think it's still going to be really cool to be able to use these funds at some point in the future and not have to worry about the tax implications of doing so. The last bullet point that we should probably address as it pertains to this specific type of portfolio is that you will be subject to certain penalties or fees or whatever if you withdraw this money before a certain point. So with Roth IRAs, you will be penalized if you basically touch any of the gains that you make in this portfolio before age 59 and a half. So in my case, guys, that means I have about 31 years before I can realistically use the funds in this portfolio, which is okay with me. That's why I still have my main brokerage. I hopefully will be retiring, quote unquote retiring, or getting out of the 9 to 5 before 59 and a half, hopefully long before that. So when I reach 59 and a half, guys, and I'm able to actually use these funds without any penalties, I think that's going to be very awesome. And I think that will complement pretty well my main portfolio, easy money number one. That's the goal, at least. We'll see how these next 30 years or so goes, but I have a pretty good feeling about it, guys. I think we're off to a great start so far. So that's pretty much the gist of Roth IRAs, guys, and hopefully all of that made sense. I would highly encourage you guys to do a little bit more research into this type of portfolio. And once again, I think it's a pretty good complement to those of you who already have, your main brokerage accounts or your taxable brokerage accounts. I think it's important to at least have one portfolio that's maybe a little more tax efficient, and this will be good for holding things like REITs, real estate investment trusts, or BDCs, or those type of companies that do not pay qualified dividends, or it's also going to be really good for holding companies or ETFs or what have you that you expect to appreciate a lot over the next, decades, basically. Because at some point, if and when you do go to sell those stocks, it will be very nice to be able to do so without having to worry about the taxes you're going to have to pay on it. I think that's just going to be awesome. And the good thing about this portfolio too, in addition to my main brokerage, is this one will also give me some dividends. And with that said, guys, I think we should probably move on and start talking about some of the holdings in this portfolio. So one of the other reasons I'm calling this the easy money portfolio is because I don't have to pick any of the stocks that go in here, guys. I already have it set up very nice with what I think is a diverse batch of ETFs right here. We have basically 5 different Vanguard ETFs, the first of which here is VOO, which is the Vanguard S&P 500 ETF. And real quick, before we talk about the others, I want to go through and show you some of the top 10 holdings just within this ETF right here. It's pretty cool, and it will expose me to a lot of stocks that I don't already have in my main brokerage account, which is another reason I'm grateful to be doing this, because it just increases the diversity, which will then help me mitigate some risk, which is going to be awesome. So the top 10 holdings in VOO are companies like Apple or Microsoft, Amazon, Tesla. I mean, you guys see it on the screen right there. There's a lot of really good companies in here. Surprisingly, none of which in this top 10 are ones that I currently have in my main brokerage. So I'm getting a ton of new companies by investing in this ETF right here. And then switching back to M1 Finance, guys, the second ETF that we have is VYMI, which is the Vanguard International High Dividend ETF. So this one has a little bit higher dividend yield, and it's going to also give me some exposure to a ton of international companies, which at this point, I don't think I have any. And looking at it here on Seeking Alpha, let's scroll down. We're going to find the top 10 holdings of this bad boy. And these are going to be, I guess I have heard of a few of these. Nestle, that's a pretty iconic company. Roche Holding AG, I'm not familiar with this company, to be honest with you. Toyota, obviously. AstraZeneca, yes, have heard of them. And then there's some other really good ones in here, like Toronto Dominion Bank. That's a great great dividend paying company. Unilever, that's a great company as well. But at any rate, guys, we are getting exposure to a lot of international companies. As you can see, the total number of holdings in this ETF is about pretty close to 1,300, so it's very diverse. All right, guys, and moving on to the third ETF that I'll be holding in this portfolio, that is VXF, which is the Vanguard Extended Market ETF. And this one is also going to give me exposure to some companies that I otherwise would not be investing in. And I'll be able to benefit from some dividends from this ETF as well, which, as you guys know, is very important to me. It's actually essential to me. And just going through some of these top 10 holdings, guys, we have Blackstone, we have Snowflake, we have Uber, Airbnb, Lululemon, Snapchat, and this one is also very diverse with the total number of holdings being close to 3,700 different stocks in this ETF. That's pretty wild. And moving on to the fourth ETF in this new portfolio, guys, we have VWO, which is the Vanguard Emerging Markets ETF, and we're going to take a look at these top 10 holdings as well. VWO, plug that in right there, and let's scroll down. So a lot of these, I'm not going to lie, I am not familiar with a lot of these companies, guys. So Taiwan Semiconductor, yeah, I have heard of them. Tencent, Alibaba, yes, definitely have heard of them. But some of these other ones, guys, I'm really not too familiar with, but this ETF, just like the others, is very diverse with the total number of holdings being just over 4,400. So a lot of different companies in this one ETF. And then last but not least, guys, we have VBR, which is the Vanguard Small Cap Value ETF, which is good. I want to actually learn a little bit more about small caps, and I'd love to have some more exposure to these. I think a lot of the companies that I'm currently holding in the main portfolio are large caps. Maybe there's a couple mid caps in there, like Main Street Capital Corporation might be a mid cap. Owl Rock Capital Corporation might be a mid cap, and I'm sure there's at least one or two other mid caps in there, but I don't think I currently have any small caps. But at any rate, guys, that has now changed with the investment into this ETF right here, with some of the top 10 holdings being Diamondback Energy, Signature Bank. We have Vici Properties, which is one that I have talked about before on my channel and have considered investing in. And I've also decided, with the creation of this tax-advantaged portfolio, if I'm going to be investing in any more real estate investment trusts, I'm also going to probably just add them to this Roth, because there's no point in me putting them in the main portfolio if I benefit from a tax standpoint by having it in the Roth. It just, to me, it doesn't make sense. And I can still buy and sell these individual stocks in the Roth, just like I would in the main portfolio. So it's, it's still pretty liquid. Some of the other top 10 holdings in this small cap ETF are Williams-Sonoma, which I actually didn't realize they were a small cap. I would have had their market cap a little bit higher than that. But at any rate, guys, the total number of holdings in this is just shy of 1,000. So all things considered, still a pretty diverse ETF. And when you combine all 5 of these ETFs, guys, I think you get a huge amount of diversity. Definitely more diverse than what I'm rocking with in the main portfolio, which at the end of the day is good for me. It's good to mitigate some of the risk by having the diversity. Almost like a backup plan, if you will, if any of my individual picks don't go too well. But I think I have some pretty strong companies in Easy Money 1. Let's just call it Easy Money. No need to add the 1, Ryan. Come on. All right, guys, so those are pretty much all of the holdings in this ETF. Now what I want to do is I want to do a little projection to see if we can maybe configure what the future value of this portfolio might be, and we are going to try and forecast it out for the next 30 years to see what's this portfolio going to look like in 30 years. Now, what we are going to do here is we are now over at the Market Beat Dividend Calculator, which is a very handy tool that I like to use from time to time and like to play with. And we're just going to put in this portfolio stats and see what it might look like in the next 30 years. So the starting principal, guys, is $500. That's what we have in there right now, right? The annual dividend yield, I think, is about 2% right now. It's not as high as the main portfolio, which is okay. The annual contribution, let's say I'm going to max out this Roth every single year at $6,000 a year. And then let's say the expected annual dividend amount increase is, let's just say it's pretty low. Let's say it's like 2%, okay? Dividend tax rate 0 because it's in a tax advantage account. And then let's say that this portfolio is going to grow by 6% every single year, which I think could be a little bit conservative, but that's okay. I'd rather be conservative than put too lofty of a number in there. So we are going to change the distributions to quarterly, taxable account, no. And let's calculate the dividends and see what this portfolio's future value might look like. All right, guys, so scrolling down, let's take a look and see what we are going to be working with. So at the end of this first year with a $6,000 contribution, I should end up with about $6,500 just in this year if it grows by 6% this year, okay? And then I won't be getting much in dividends, about $10, which is okay. But scrolling down, let's just scroll all the way to the bottom and see what this is going to look like in 30 years, which actually looks pretty decent. So Based on the numbers we put in, guys, it's estimated that after 30 years, okay, by the time I'm 59 and a half or 60 years old, what have you, this portfolio should be valued at about $575,000, okay, which is pretty nice. That will be a nice cherry on top to my other dividend portfolio. And then it looks like just in the 30th year, guys, I'll get an extra $3,500 just from dividends. And this is assuming that we're reinvesting the dividends received from these ETFs, which the annual dividend is not too high. Okay, $3,500 across 30 years. That's really not anything to write home about, especially for that length of time. But I will tell you this, the portfolio balance at the end of those 30 years, an extra $575,000. That's awesome. And with all of this said, guys, at the end of the day, I'm not going to put too much stock into this value right here because this could be way off. Okay, we could perform considerably less across 30 years. We could perform considerably better. It just depends what the market does across the next few decades. But it's going to be a wild ride one way or another, and it's going to be a lot of fun. And so as I've touched on throughout this video so far, guys, the maximum that one can contribute to this portfolio is $6,000 every single year. And right off the bat, I don't know that I will be maxing out this portfolio right off the bat. I do think by maybe the end of this year or sometime early next year, as my income continues to increase, I do think that there is a pretty good chance that I could max out my Roth and maintain the same contributions to the main portfolio, which is something that's important to me. I know when talking about this in the past, some of you guys have advised maybe I should back off the main portfolio and prioritize maxing out the Roth, but I don't want to slow down the growth of the main portfolio, guys. I have plenty of time to be maxing out this Roth. If not this year, guys, I definitely foresee myself being able to max it out next year. Either way, I'm not tripping about it. I think it'll all work out. But that's the gist of this portfolio, guys. This is the new portfolio, Easy Money 2. And when we do the weekly portfolio updates, I'll be sure to include this and share with you guys the value of it and how that's changed over time. I think it's going to be really fun to be able to use this M1 Finance platform to share with you guys in these videos because it's very clean. I would actually argue it's a cleaner looking layout than what we're seeing in the portfolio that I've created here on Google Finance. I mean, they're different for sure, but this is just very clean, very easy to look at. So I'm excited to talk more about it with you guys in the future. And with that said, guys, we are now going to switch gears and get into the weekly portfolio update and see what's going on in the Easy Money Dividend portfolio. But before we jump over there, I would love to know, what do you guys think of this Roth IRA? What do you think of the ETFs I have in here? What do you think of my plan? I'd be very curious to hear your guys' thoughts in the comments below. All right, guys, now we are over here looking at my dividend portfolio tracking spreadsheet here on Google Sheets. If you guys would like to grab this spreadsheet for yourselves, it's very cool. It's been very handy for me. The link to do so is in the description of this video. All you need to do is click the link. It's going to open up a spreadsheet template that looks like a more blank version of this. Once you open it, you're going to go to File and then make a copy and then hit OK. And then once you make a copy, you'll be able to start inputting your own data and start building it out so it looks like this. And just so you guys know, I've gotten some questions on this lately. The only place on this spreadsheet template that you'll need to put in information are the cells highlighted in yellow. It'll look something like this. Otherwise, anything that's not highlighted in yellow should auto-populate, and hopefully it should be very easy for you guys to use. So once again, if you want to grab that, the link to do so is in the description here. And now regarding the weekly update, guys, my portfolio is sitting at an all-time high. Okay, we just broke $34,000 in this portfolio, which is unreal because as you guys can see on the screen, last week, just 7 days ago, this portfolio was sitting at about $1,000 less. And the week before that, guys, it was even lower. So lately, this portfolio has just been growing like a weed. Like I said, in the last week, it's grown by about $1,000, which is also about a 1.3% gain. As you can see right here, the total gain is 9.76%, and we are now at an all-time high total gain as far as dollars go. Just broke $3,000 in unrealized gain in this portfolio, which is very sweet, very nice to see, actually kind of bittersweet because it's been hard to find stocks at a value even in my own portfolio. I did end up picking up a couple stocks, which we'll talk about in just a moment. But before we get there, guys, I do want to share with you this annual dividend income is not quite accurate. There's been an issue with this spreadsheet, as I'm sure you guys know. I've been getting a ton of comments, ton of emails about this. There's been an issue with this spreadsheet in loading some of the annual dividend income information. Like you can see right here, I think it's not Lockheed Martin. Main Street Capital Corporation isn't loading for me. Procter & Gamble is not loading for me. So I have a few stocks in here that the spreadsheet is not loading the dividend information for. And that, there's nothing wrong with it, guys. There's nothing wrong with the formulas or anything like that. It's just sometimes it's a little bit slow it's been a little bit slow to load the dividend information for whatever reason. I'm not exactly sure why, but it's been going on the last couple days, which I wish that wasn't the case right now because I really want to give you guys an accurate reading on my annual dividend income. But I do believe it's about $1,560. And just to prove that, I will put on the screen here a screenshot just from my Charles Schwab brokerage account, which will reflect that accurate information. So about $1,560, as you guys can see right here, which is very sweet. Okay, we are now about $440 away from reaching the 2022 dividend income goal of $2,000. I hope to hit that by the end of September, and I think we will definitely do so. Now, as far as stocks that I bought this week, guys, nothing crazy, okay? Like I said, I was kind of struggling to figure out what I wanted to buy, but I just went with Old Faithful. I put some money into Lockheed Martin, and I put some money into Intel, and I'll tell you guys what, I did get a little Christmas money to invest. I got an extra few $100s, thankfully. I'm very fortunate to have gotten that for Christmas. And then you pair that with my normal weekly contribution of $150. And this week, guys, I was able to contribute about $450 to this portfolio, which is very awesome. So I split that 50-50 between Lockheed Martin, and now my Lockheed Martin is up to about 3.5 shares in this portfolio, which is, I think, is a pretty substantial position. This is not an easy stock to accumulate shares of because it's so expensive in terms of share price. And then I also was able to pick up about 3.5 shares, maybe 4.5 shares, I don't remember, of Intel, and that got me just to about 30.5 shares of Intel now, which is awesome, guys. And to show you how much of my portfolio those two make up, Intel is currently about 4.8% of my portfolio, so the position in that is definitely growing to be one of the larger positions in this portfolio. And then Lockheed Martin is almost to 4%. It's currently sitting at 3.7% of my portfolio, and I think I still have a little bit of ways to go until I'm satisfied with my Lockheed Martin position. I think I would like to continue contributing to it, but as far as Intel goes, guys, I think I'm getting pretty close to moving on to something else, okay? And I think a 4.75% position, even a 5% position in this stock is good enough, at least for now, and I don't know exactly what my next move will be once I stop investing in Intel. I'm kind of throwing around the idea of adding another stock to my portfolio. I have a couple in mind. I won't reveal them quite yet. I've kind of touched on that in previous videos, so you could maybe get an inkling by watching those. But nothing set in stone, guys. I'm not exactly sure what I would switch gears into and buy instead of Intel right now. So that's something I need to chew on a little bit more. But when I make a decision on that, you guys will definitely be the first to know. But as far as next week goes, guys, I do plan on buying some more Lockheed Martin. Okay, I maybe will pick up some AT&T. I'd still like to get that position to an even 100 shares, and I'm less than 10 shares away from that. I think I have close to 92 shares of AT&T. And unless I make a decision on Intel, I'll be putting $50 into that as well. And then in addition to those three stocks, I'll also be contributing $50 to the Roth to be spread out across the 5 ETFs that we covered earlier in this video. And as far as Easy Money 2 goes, guys, as far as the Roth IRA goes, that's going to be my MO, at least until I am able to increase the contributions to that, which I'm sure I will be able to do so soon, but I need to work on increasing my income a little bit more, guys, but we'll get there. All right, my friends, and that pretty much wraps it up for today's video. I hope you guys enjoyed watching this one. It was very cool to be able to finally reveal this new portfolio to you guys. Not that I was like keeping it a big secret or anything, because I just made it like a few days ago, but it's very cool to officially have made it and now be able to talk to you guys about it. And I look forward to sharing with you guys the progress on this portfolio. I think it's only going to be good things. And with that said, guys, once again, I'd be very curious to hear your thoughts on this new portfolio. So leave me a comment below. Let me know what you think of the ETFs I have in there. Maybe some of you guys out there use M1 Finance. I'd be very curious to hear your experience with that platform. So let me know all these things in the comments below. And if you have not done so already, before you click on to the next video, please don't forget to leave a like, leave a thumbs up on this video. It would mean the world to me, and it would really help this video get pushed out to other investors here on YouTube, which I am trying so hard to do. And last thing, guys, if dividend stocks is kind of your thing, then I invite you to join the Dividenders Discord server, which for those of you who have never heard of this or aren't familiar with what Discord is, basically it's just a big messaging app, a big group chat where a lot of us dividend investors are getting together. We're sharing our portfolios. We're talking dividend stocks. We, more than anything, are learning from each other and sharing sharing our own experiences, which has been awesome. But if you want to join that, the link to do so is in the description of this video. All you need to do is click the link. It'll open up Discord and it will basically add you to the group chat. We're up to just over 320 members right now. So it is growing pretty substantially. It's growing pretty quickly. And there's just a lot of fun to be had, especially if dividend investing is your thing. So join the party and let's talk some dividend stocks on Discord. I will see you guys there. And with that said, guys, I will now get out of your hair. But thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.